So PSD2 is a new series of requirements that are going to impact our consumers, our merchants, our banks, and there's a couple of pieces to the legislation. One piece is around stronger security. An example of stronger security would be when you buy something online. Today, sometimes you have to enter a one-time passcode to complete the purchase, but it doesn't happen all that often. But when the new requirements come into place next September, you will have to enter one-time passcodes more frequently so that you have stronger security in the e-commerce channel. And so it's good and bad. It's good because it can reduce some chances of fraud that are happening, but it also can be less convenient for consumers to complete that purchase. And some consumers may decide to not complete the purchase, which isn't good for merchants because then they lose out on some sales. And so what we're doing at Visa is trying to encourage our banks to go and embrace biometrics more frequently so that when I buy something online, rather than entering a one-time passcode, I can enter my biometric on my mobile device to complete the purchase. And then it gives you a very safe and convenient way to pay online, which is good for both consumers and merchants and everyone. We're seeing that consumers are getting pretty comfortable using biometrics. We've done a number of surveys around the world whereby most people are preferring a biometric over a password. It's just more convenient and it's safer as well, and it's stronger. And so we are seeing biometrics become, we think, a way to nicely replace passwords going forward, and we're seeing consumers embrace and adopt those. And over time, more and more consumers are having mobile devices that have a biometric capability embedded in them, and as they get those new devices, you're going to see more and more biometrics being used for e-commerce and throughout your digital life. In the beginning, retailers may see both a reduction in fraud, which is good, as well as they may see some incremental abandonment, and so that's bad. And so what we're trying to do once again is help our retailers find the right balance by helping our clients get biometrics more broadly deployed within their operations. I think biometrics is going to vary depending on your environment. And so if you're talking to your in-house personal assistant, you're going to be doing a voice recognition with that particular device. So voice recognition for some scenarios, like the in-store assistants, maybe if you're driving in your car and you want to order something, that's another good example where voice makes a lot of sense. But you may be using fingerprint as well. So a lot of cell phones today have the fingerprint sensor, and a lot of consumers are very comfortable using fingerprint. But other consumers may be using facial recognition because either their phone only has facial recognition or they actually prefer it. So it's really going to be up to the consumer to decide what they're comfortable with, as well as the environment that you're in. And that's going to determine which type of biometric you're going to use. But you're going to see a whole wide variety of biometrics being used throughout. So a good example of how biometrics can start to change the shopping experience would be, let's say that you're a merchant who you go to often, and you have downloaded the merchant's mobile app on your phone, and you decide to take a picture of yourself and load it into the mobile app so that when you go back to that merchant, they can recognize you when you walk into the store. So they know who you are, they know what you shop, they can direct you to your favorite items. You can put stuff into your basket and you can check out seamlessly without even having to take out your card or pay, because everything will happen just remotely, seamlessly behind the scenes. And it's all being done via biometrics, and it's all based upon the consumer's preference to enroll in that service. So it gives you an example of how merchants can tailor and create really neat experiences for their repeat customers who shop often with that particular merchant. Buying becomes seamless behind the scenes. You don't take out your card, you're simply walking in, you're buying what you want, and you leave. The technology is there, and more consumers will start to see that, hey, this is actually really quite convenient, and it's safe and secure at the same time. So it's all great experiences that are going to be available to consumers in the future. The second part of the legislation is around open banking, and what it means is that consumers can provide access to their bank account information to third parties. And what that means is it opens up new experiences for consumers and retailers when you're purchasing something. And a good example of that would be if I want to buy €1,000 suit online, but maybe I don't have $1,000 in my bank account today to pay for that, I want to pay for it in installments. And so the merchant may say, hey, I want to offer installments to this consumer, but I want to make sure that they have an income. So I want to verify their income. And you can do that now through these open banking technology. Because what would happen is I would allow access to that merchant to my bank account information, and that merchant can then pull what's my salary, how much do I make per month, how much am I spending per month, so it helps them determine who's a good consumer I should offer installments to, and that helps everyone. It helps the merchants close more deals, and it helps consumers buy what they want a little bit sooner as well.
And this is for high-end consumer. What about the other retail?
The legislation also is good for folks that are looking for deals. We call them cost-conscious consumers. And what they can do is they'll be able to find better offers and locations where you can purchase something maybe for 10% less or 20% less at these particular merchants. So it offers better analytics to consumers across their portfolio. And so an example of that would be there's a number of spend and financial management companies that exist. You can provide access to your bank account information to that company, and they can go through where you're spending your money, and they can recommend to you, hey, you could save 10% off if you go to this particular type of merchant over here. So it's just personalized financial management tools for people who are very cost conscious.
But do you think there's going to be a real impact, or lots of people are going to adopt this?
It's a good question in terms of who's going to adopt this, because to be honest, this technology has been around for a while. The only thing that's really new now with the legislation is it's required for banks to provide access. In the past, consumers could still grant access to these third parties, but it was using a slightly outdated technology. So the technology has been around for a while, and we have seen some uptake, and we're yet to see how much of an impact this will have. It all depends on how compelling are the services that these third parties build. And if they build something that's really compelling, then they'll get more and more consumers to their platform, and we're all waiting to see what this will happen. For mid-range retailers, what it means is they're often going to have a combination of some cost-conscious products, and so they can use the same technology to offer better deals to those, but they also may have a mix of people who also are high-end products as well. So they can also offer some installments opportunities for those consumers who are maybe stretching the budget a little bit. So they can offer a mix of both technologies to their cardholders and to their consumers. And so it should be an opportunity for all merchants to take advantage of these new technologies and services.